Big TGIF from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. You're watching the Breast Cancer Research Foundation ringing the opening bell at the New York Stock Exchange. Terra Innovatum, I think I got that right, getting trading underway at the NASDAQ. Hey, if you thought the stock market only goes up and to the right, you are being reminded that is not the case today. After a year where markets have been mostly on autopilot higher, fresh concerns on the financial system are rattling the exuberant mindset of the many bulls out there. Regional bank stocks tanked on Thursday, led by declines at Zions Bancorp and Western Alliance Bancorp, which said they were the victims of fraud on loans to funds that invest in distressed commercial mortgages. Something you never want to hear from a bank, guys. Both stocks are under pressure this morning. This comes on the heels of the First Brands bust, which has sent shares of boutique investment bank and major First Brands lender Jefferies absolutely reeling. I do want to caution, though, if you're looking for a Lehman Brothers-like moment for the banks, this isn't it, based on the folks I've been talking to. But still, it's unnerving to a market trading on record valuations because of tons of AI hype and prospects for more Fed rate cuts. Let's head down to NASDAQ and check out Yahoo Finance senior reporter Brooke DePalma to see how the markets are handling this banking stress. Brooke.
Good morning, Brian. Let's get right to that because the regional banks right now, we're seeing those steep losses that they experienced on Thursday's trading session reverse in the early innings here. If you take a look at the YF Interactive right at the open, we're seeing Zion. Zion experienced one of the steepest losses, down 13% yesterday. Now we're seeing a rebound there. It's up about 3.5% just at the open here to kick off this Friday trading session. And that's after Baird actually upgraded the stock to for neutral to buy, saying that after the steep losses, this could be a buying opportunity. The stock is down 15% over the last 10 days. It's also down more than 15% last month. But now, once again, we are seeing that rebound based upon this renewed hope. Also, Western Alliance, that was one of the stocks that saw some of the steepest declines on Thursday. It was down around 11%. And now in the early innings, it's up about 2%. And just taking a step back, regional banks are mostly in the green this morning as we make our way into today's trading session. Also taking a look at something, it's called NASDAQ Regional Banking Index, KBW. It's the ticker symbol up KRX. That also opening roughly flat this morning, so keep an eye on that as well. But taking a step back, all three major indices are indicated now to have a bit of a mixed open. We do have the Dow trying to hold on to some momentum. It's flat at the open. The NASDAQ leading the losses down about 0.5% at the open, and the S&P 500 down about 0.2%. But keep in mind, this is based upon this renewed hope around the U.S.-China trade war. Heading into this morning, all three major indices were indicated to open lower, but then we heard from President Trump, who told Fox Business in a recorded interview that the trade tension between the U.S. and China was not sustainable, and he went on to say that we're going to be fine with China, but they have to have a fair deal. And that's where we're seeing this renewed hope come, especially with the Dow moving higher, up about 0.1%, trying to keep it there. But boy, have we seen a lot of volatility over the past 10 days alone. The VIX index, typically a fear gauge among investors, is up 47%, and we experience the levels that we saw back in April. So lots of moving parts. We're seeing that VIX move down, a bit of a mix open here to make our way into Friday's trading session, Brian.
All right, good stuff there, Brooke. Thanks so much. Here's what I'm tracking right out of the box today. Like we've been saying, a bank bruising. Regional bank stocks got slammed on Thursday, led by declines at Zions Bancorp and Western Alliance Bancorp, which had said they were the victims of fraud on loans to funds that invest in distressed commercial mortgages. Both stocks rebounding this morning. Big banks such as JP Morgan and Citigroup are also seeing mixed trading. This comes on the heels of the First Brands bust, which has sent shares of boutique investment bank and major First Brands lender Jefferies reeling. Says JP Morgan on these events, while we are questioning why all of these credit one-offs are seemingly occurring in a short period of time, the reality is that even though these exposures may be well contained and have a limited financial impact, this is an industry where investors, especially those that are new to this sector, tend to sell first and ask questions later, especially when it comes to elevated credit concerns. Food for thought there. All about those swipes. American Express blows past EP estimates and says demand for its revamped Platinum card have been strong, despite a $200 price hike. Amex CEO Stephen Squeri just told me this moments ago by phone about the banking stress. I don't see any blowback. If you look at what these banks were reporting, was big one-time losses, and we don't do that. What could be concerning to me would be the delinquency rate getting out of control. because that's a leading indicator of people potentially going into default, and we're at 1.3% across our business globally. Dream on. Salesforce caps off a rather wild annual Dreamforce event in San Francisco. This year brought fresh scrutiny on billionaire co-founder Marc Benioff, perhaps unachievable financial guidance, and a host of buzzy new partnerships. The event also shed light on Salesforce's dreary stock price, which in no way has played in this year's great AI boom. Shares have lost, get this, 26%, despite many tech stocks absolutely ripping higher. So what do you do with Salesforce? We will dive in shortly. Here are my opening bid roundtable. JP Morgan Asset Management Global Market Strategist Stephanie Alaga and Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Good to see you all here. Stephanie, I want to start with you. There's a lot of concern about the banking stress. Do you see contagion based on what you cover?
Right now, we're not seeing strong signs of contagion, but I think similar to Jamie's comments about cockroaches, there's always more around the corner, and living in New York, I can attest to that. I think the real signal and the takeaway for investors right now is that, look, exactly as you earlier posed it, it's been a remarkable run in markets. Credit spreads are tight, valuations are high, and particularly in corners of the market that are more opaque, opacity can sometimes shield vulnerability. So we just want to make sure as investors that we're doing our due diligence, and that I think is the key takeaway for investors.
Steffi, that is a really good point. Of course, your CEO Jamie Dimon talking about if there's one cockroach, there might be more. He was saying that on the earnings call when the company just reported. But let me follow up with you. I think some folks are worried that we might be seeing some form of the start of a financial crisis. Like based on the people I've been talking the past 24 hours, I don't see it. Sure, there's excesses in the system, but definitely not like anything I saw in 2007, 2008.
I'd agree. I think, look, the fundamentals underpinning the market right now are still really solid. We don't see a lot of the same kind of overextension that we've seen in other periods of late cycle market dynamics. Interest rates are still relatively elevated. I think that's also kind of keeping some of the activity at bay. And right now, we've been talking so much about an AI bubble. And while we don't think there is a bubble in the traditional sense, I think all of this debate, all of this scrutiny also just adds further evidence that investors are really approaching market valuations with some caution and not just diving into the next kind of wave of euphoria.
Inez, and it's not just bank stocks under pressure here. We're seeing a really large sell-off in crypto. Maybe it's not too surprising. That has been a big risk-off sector for investors as the broader market has risen up and to the right all year. But again, a pretty big sell-off and something to note.
Yeah, most definitely. It's also a very leveraged trade that we've seen in crypto. We've seen long liquidations. Keep in mind that when you compare crypto to other assets like the metals, like gold, for example, it is a much smaller market. But I will say that it is a head scratcher for a lot of crypto bulls that are expecting this month to be a stellar month for Bitcoin. You still have calls that call for Bitcoin to be much higher than where we're seeing it right now. You saw that crash last Friday with Bitcoin when after President Trump announced the threat for those tariffs. And even despite his announcement today, you still haven't seen Bitcoin sort of lift from there. It's been a choppy ride for it. But nonetheless, look, you have bulls out there that are saying that they're expecting flows from gold to go into Bitcoin. We'll see what happens there. But definitely this has sort of spooked crypto investors that are very much banking on this sort of debasement trade to continue. And the long liquidations and the forced selling has weighed heavily on this market.
Yeah, I'm reminded when we see the periods of stress like this in the markets or rising stress, news always comes out of the blue on Friday afternoon or evening. So I will definitely be watching the crypto markets all weekend long. Inez, is you seeing a rotation into gold? How's gold doing right now with this sell-off?
Look, we're seeing that gold, it's been high after high, and there may be some resistance where we're at with gold right now. The question is, where does it go from here? And you still have Wall Street that is long gold. You still have, you have looked at, we're watching gold at levels that Wall Street was expecting mid next year. So it has very much been in an overstretched sort of capacity for a while now. The question is, what what will it take for investors to sell gold? And you have a lot of investors that are central banks, and they don't sell the gold, so they're keeping it. The question is, if you have a heavy sell-off in the rest of the market, do you eventually see gold being pulled down? You still, though, have Wall Street that's very bullish on this metal.
Brooke, perhaps you could pull up some of these regional bank stocks again. You're almost about 10 minutes into trading. Very interested, some of the notes that I've seen over the past 24 hours. I don't hear a lot of enthusiasm. Go in there and buy Zions, go buy regional banks on these dips. There's not an overabundance of caution, but not a lot of appetite to stick one's neck out there and go hand over fist in buying.
Yeah, well, keep in mind, Baird did upgrade stocks of Zion this morning, and that's why we're seeing Zion as well as Western Alliance also regain some momentum this morning. Taking a look, though, we are still in the green across the board as we make our way, once again, about 10 minutes into the open. And this is led by the two companies, Zion and Western Alliance, that both warned of those credit losses that happened during the third quarter. It was down about 15%. Now we're seeing that renewed optimism as this may be, based upon these steep declines, a moment to step into the stock. It's up about 4%. And we did get that call on Zion Bank Corporation from Baird to time to buy here. And that's also moving the stock higher, up about 3%. But year to date, both of these stocks have been under pressure, down about 11% compared to the run, up 13% the S&P 500 has seen. And so if you take a step back and take a look across the board, these stocks have mostly been in the red year to date. And now we are seeing some momentum return to these stocks as they sort of pare back some of their valuations on Thursdays. You could see here, based upon the past 2 days, all regional banks were in the red.
I'm still getting myself back in gear after there's other things going on in the market, I should say. I'm just getting myself back into gear. I'm spending a couple days over at Dreamforce, the Salesforce's annual event out in San Francisco. A lot of usual hype over there event. I'll have more of a drill down to Salesforce's stock in my Sunday morning brief newsletter. It's a very long piece, but I think it's very important research. Stephanie, I mentioned at the top of the show, Salesforce stock has done squat this year, down 26% year to date. At the same time, we've seen the AI trade go through the roof, whether it's NVIDIA, AMD, you name it. What do you do with a stock like a Salesforce and other software names that have been under pressure because of the AI concerns that it's going to crush software? Are those value plays, or you just stay away from there?
The answer is really nuanced. I think we have to have humility as investors too, that we can't fully understand. AI has the potential to automate a lot of processes, a lot of services. There's so many industries that are going to be touched by AI. Now, does that mean that AI is going to completely evaporate demand for those businesses? Or could you actually see the opposite happen, where AI stimulates demand, but the demand ultimately changes and there's still kind of a core business opportunity there? I think it's not just, in software, but also across the AI value chain, and particularly in some of the adopters of AI, where we're asking some of those questions. I think the reality is you need to look at fundamentals and focus on, what companies seem to have competitive moats and strong positioning, at least for the next few years of demand, of which we see a lot of, we have a lot more clarity to. And what I would say to some of those, software companies, what is quite notable is enterprise adoption is really picking up this year. KPMG's latest AI Pulse survey showed that the share of firms that are now adopting AI agents has tripled to something like 42% now amongst large companies. And the average enterprise investment in AI is now $130 million. So there is a lot of willingness to spend there. And I think the question is, where is that going?
Last quick word to you, Inez. I think it was just not a good Dreamforce from Marc Benioff. He made some comments regarding his support of President Trump, his desire to perhaps get the National Guard flowing into San Francisco. Not a good backdrop for him, but they did put out guidance, Inez, very optimistic. And the street from the folks that I've been able to talk to is not necessarily believing this guidance. It's like Salesforce is not taking part in the AI rally at all, and it's unclear to me when they might.
No, they haven't been taking part in it, but they are pushing back against what they're calling sort of a myth of this enterprise application software that's dying. And look, we've seen you saw a slowdown. They're trying to get back, or trying to say, look, we're not dead, and we are going to continue to grow. It's just a matter of whether or not they convince the street about that.
I should mention too, we're showing at the bottom of the screen, Ron Conway, a longtime friend of Marc Benioff, has decided to leave one of his boards because of just, I guess, his comments that Marc made this week. So lots of stuff going on there. I'll have more to say this my Morning Brief Sunday newsletter. But a big thank you to my opening bid roundtable. Love the analysis. Appreciate it. Coming up, Starbucks CEO Brian Niccol chats with me on how he sees AI reshaping corporate America. We'll be right back. There has been a lot of focus on where Starbucks is on its turnaround under CEO Brian Niccol. And while the consumer isn't making the turnaround easy for Niccol and his new team, that hasn't stopped him from reinvesting in the business. The company is remodeling hundreds of restaurants, redoing its menu to include my new fave, protein coffee, and retraining baristas. Niccol also told me at Dreamforce this week he is all in on AI. How are you using AI in Starbucks?
So right now, probably the biggest thing we've done is this kind of barista assistant. It's called the Green Dot. You might have heard us talk about it. And it really helps our store leaders navigate how to run the Starbucks. So if you run into an issue with a piece of equipment or how to build a certain drink, it's a really fast way for us to then give them support with AI to get them to the right answer faster or to the right solution faster. But we're also experimenting with it in other places, from voice to vision, also across the business as it relates to inventory, supply chain. So there's a lot of neat things that we're experimenting with, obviously forecasting, scheduling, but none of those things yet are at scale.
I was thinking down there, there's a figure robot. Like, are we nearing where there's robots in the coffee store? Like, is that going to happen?
We're not near that right now. We just put more partners back into our stores to give people a great experience.
Robotic, right?
But not robotic. These are real people that are here to give you a real experience with real craft.
Is AI unleashing more productivity in your business? Because that's the undercurrent here. Like, all this stuff is great. A lot of companies, Walmart, you're on the board. They just announced a big deal with ChatGPT. Like, these things sound great in press releases, but like, are they actually working and doing stuff?
So we're still in the early days of this, but I believe there is definitely opportunity here to help us get things done faster, more efficiently. To what scale that is, to be determined. And this is what I mean by experimentation and learning. But we're definitely already seeing a big impact in our technology area. The ability to get code done so much faster is real. How we do that, we still need to figure that out. Because we're still working from some legacy systems that we need to figure out how you layer these things in or work and partner with it.
What's amazing to me, I originally met you, I think, when you were at Yum Brands at a New York City Investor Day, 2016 or 2017. I was still young in my career. I think we just talked about menus. Now we're sitting here talking about like AI. And
we were probably talking about using social media just at the start of that, right?
It's just absolutely mind-blowing.
Exponentially faster.
It's true. So you are over a year into the role of CEO of Starbucks. Finish the sentence for me. The Starbucks of today is?
I think the Starbucks of today is getting back to being a great experience for customers. We've switched away from, I think, being focused on efficiency and tasks and reoriented the business to being a great customer service company again. And that means personalization for, what's your drink, Brian?
It is now the protein iced coffee.
Okay.
I go right out of my High Rocks training class, and now I'm having this protein drink. It's a little expensive. We'll take that in a little bit later, but still, it tastes good.
Well, look, I started my day with a protein latte, vanilla latte. So obviously, there's going to be more innovation coming that I think is very much on trend. But I think what you'll also find is our baristas are better set up to give you that great experience for that personalized drink that you want to have. And I think that's where Starbucks is today versus a year ago when I talked to our partners, they didn't feel like they were set up for success to give people the experience that they actually expected from Starbucks.
I've joked to you in the past, like I followed how you rolled out items at Chipotle. They were called a stage gate process.
Yeah.
I would hear about this a lot. How have you changed the innovative process at Starbucks? Because before you, they would try this energy drink, and I would order this pink and blue drink, and it tasted like nothing it was as advertised. Like, what are you doing different?
Yeah, look, we are using a stage gate process. It's one of those things that I think when you put some discipline in place around innovation, you end up with bigger innovation that can be executed correctly. And protein's a great example. That really went through our process. That's really the first item that we had the ability to say, let's take this from idea all the way to scale. And on our way, we started in 5 stores. We got a lot of feedback from those baristas on how to make it better. When we got that feedback, we then put it into, I think it was around 100 stores. And then we better understood what's the supply chain necessary, what is the right way to build this, and what is the way that customers want to order it. And so you've seen us make some changes in the app. You've seen us make, I think, some smart decisions in how it's merchandised in the store. And then most importantly, our baristas are set up to execute it with excellence every single time.
What's next? Not necessarily just on the coffee front. How are you reinventing that bakery case when I walk in?
Yeah, well, look, I think you might have heard me talk about this. From the beginning, I said, look, we got to get back to winning in the morning. And I think we've done a nice job of setting ourselves up to win the morning. First, from an experience standpoint around coffee and beverages, now we're going to turn our eyes to how do we make the bakery case relevant and more relevant for that morning experience. And so we've got a new bakery case that will be coming out with, I think, more artisanal pastries.
Are you doing away with my egg bites?
No, that's a staple. So this is more focused on how do we get the pastries right. We've already got some great innovation coming on what I would call like the protein forward breakfast items. The egg bites platform is a home run. We need to figure out how we continue to leverage that going forward.
What else protein can you sell?
Well, look, this is where I think we now have to focus on how do we build an afternoon day part. And so it's like win the morning, let's start building the afternoon. And in the afternoon, I think we have opportunities on food to get the right selection of food. And then I also think we have opportunities on drinks to figure out how we can bring the right craft with the right flavors, customized energy, as a matter of fact, even with those drinks and flavors. So, I'm optimistic about what we can do on the afternoon day part while we continue to make great progress in the morning day part.
There was a Starbucks, and I think it's still by me in the city. At one point, they were serving alcohol. Are you a big believer Starbucks should be serving some form of drinks with alcohol in it?
Look, I think that's a great example of experimentation that's happening in our roasteries and reserves. We have some fun ideas. I've heard about the matcha margarita.
Espresso martini.
The espresso martini is a crowd pleaser, but there's some fun things we can do, right? Matcha margaritas, the pink drink Cosmo. So I think there's some fun things we can experiment with alcohol on. It's still at a very small level, but when we strike the right chord, if we have the ability to scale that, we will scale it.
Now you're also remodeling a lot of restaurants. How many are you going to remodel, and what is your hope for these remodels?
Yeah, look, we've done about 100 so far. Our plan is for this fiscal year to do well over 1,000. And these uplifts is what we're calling them because it's really focused on the front of house experience, meaning the seat you would have.
Plants?
There'll be rugs, there'll be drapes, there might be some plants. Like the purpose is to get back to having that great third place. Howard and frankly Starbucks in the beginning of this concept recognized people wanted to spend time in a third place between home and work. And we got to get back to giving people that environment. And I think it's important that you walk through that environment, even if you're going to grab and go. Or if you're pulling up to the drive-through, when you see through the drive-through, the coffee house over there, or maybe next time we're like, next time you might want to get in there, right, and grab a seat. So I love what's happening. I always say to people, every coffee house needs to have a couple seats where everybody walks in and says, that's my seat. Like, when that person moves, or if it's available, like, that's my seat.
Have the times changed? Let me just push back a little on this.
Yeah.
I see the next generation, let's say under 20, they're glued to their phones and they're just in a rush. Do they really want that part as a third place? Like, is there?
Look, I think so. I mean, if you look in our cafes, and especially like after school, call it the 14 to 18-year-old crowd, they need a third place to hang out with their friends, and they want our drinks. So absolutely, and I think actually, if we have more of these third places, maybe I'm being a naive parent here a little bit, but I hope they would put their phone down and connect with each other. And we're going to provide them that space where they can do it. You're already seeing schools adopt this, where less and less kids have their cell phones in the school because they want the kids to connect not only with their teachers but with each other. Like, you can see a marked difference if you walk into a school and cell phones are not part of their day at that lunchroom, because you know what you hear? A lot more conversation.
Final thought for me ahead of the weekend. If I have learned anything over the course of my career, it's this: trust is incredibly important. Do you trust the person on the other side of the transaction? Do you trust the CEO or CFO will deliver on guidance? Do you trust the person running the company, who in turn is helping shape how you could retire and build wealth someday. It's not easy to trust in business and life. And when a person breaks that trust, it's very hard to gain it back, at least for me. Let this be a reminder for you on two fronts right now. One, markets are currently losing some trust in the health of the banks after a year of big-time asset price appreciation. That trust won't be repaired overnight. And two, do you really know the leader running the company you are invested in? If you don't, dig around and get to know them better. You would be surprised how your trust in them could evaporate very quickly. Coming up, we'll stay on the bank stock sell-off sweeping markets. Ali Canal has you covered on Market Catalyst.